The world is changing. We live in a deglobalizing world in which economic volatility is on the increase, where rates are structurally higher, and when inflation has been above target in most Western countries for the best part of half a decade. In such an environment, we think it's important to be allocated globally to take advantage of increasing global divergence in economic cycles, a greater degree of amplitude of ups and downs. And in such an environment, it's also critically important to be dynamic, to respond to the macroeconomic environment. Most fund managers simply don't look at the macro. We think incorporating this is going to become more important going forwards because of the process of deglobalization and global divergence in economic cycles. We see a unique situation in the sense that there are opportunities more globally in orientation. So historically, in recent years, the US has dominated, but now we see some amazing opportunities in Europe, amazing opportunities in Japan, also increasing opportunities in emerging markets. We think having a global manager able to pivot between growth in up markets and pivot towards quality in down markets is going to be very additive to your portfolio alpha. We also think it's critically important, if you are globally allocating, to invest in companies that are different. And so if you're investing in the US, most investors will already have a large exposure to big cap growth companies. And so if you're investing in Europe, or indeed in Japan, you don't need more big cap growth. There are very different opportunities. For example, within Europe, defense companies, banks, cement companies, a variety of industrial stocks that are producing not necessarily in Europe for export, but perhaps producing in the United States for domestic use. So more specifically, opportunities that we see, if we look in the European defense space, there is a stock, one of the larger defense names in Germany, that has outperformed the world's leading GPU producer. Everyone knows the incredible success of AI, but European defense companies have in some instances outperformed those AI stories in the US. So the opportunity set is bigger than ever, but also the dangers and the volatility globally is greater than ever. So we think having that flexibility to pivot the portfolio to suit the macro environment, having true diversification across regions in different stocks, not simply duplicating your large cap growth exposures, is going to be critical in driving alpha going forwards. Thank you very much.